Learning Objective 6 talks about Section 1231 assets. It distinguishes them as business use, long-term depreciable assets. Okay, so fixed assets, property, plant, and equipment, that kind of stuff. That's what we're talking about. Business use, long-lived assets. That's 1231 property. Now, in the description of 1231 property down here, it talks about the process of accumulating gains and losses from sales of 1231 property and how those are going to be treated. And you can see in this last paragraph that the sale of 1231 property at a gain or loss produces the best of both worlds, because gains from sale of these assets produce capital gain treatment, while losses from these kinds of assets produce ordinary losses. And keep in mind that, capital gains, what are the benefits of having something treated as a capital gain? If you're an individual, you get a lower tax rate typically on capital gains. If you're a corporation, you get to use you get something to offset capital losses, or a way to deduct capital losses, basically. So capital gain treatment is preferred. It's the best scenario for gains. Ordinary losses means you get to deduct whatever loss you have against regular old income, like wages or revenue, whatever your income is. So ordinary losses are great as compared to capital losses. Remember, capital losses are usually limited in their deductibility. So that kind of general rule for 1231 property sales is very important in understanding kind of where the chapter is going to go from here. So this talks here, property included, what kinds of assets are included in 1231. Again, depreciable property typically. Property held, let's see, where's it talking about more than a year? It's here somewhere. It's property held more than a year. Actually, I think it's in the property excluded section right down here. Property right here, held more than one, or not held for more than 1 year. That is where a business, long-lived assets not held for more than a year, those assets are excluded from section 1231. This discussion of casualty or theft and non-personal use capital assets, I want you to kind of try and tune that out in going through these examples that are coming up, because the examples are important, but this aspect of those examples is pretty rare and not that important. So try and keep that kind of separate in your head. There's a netting process for section 1231 gains and losses, just like there was for regular capital gains and losses. The first step was that rare, weird stuff, the casualty netting, but then you get into the section 1231 netting process. Good example, really, example 42 to look through. It talks about the whole process of netting through all of those asset sales, the gains and losses. Another example 43, they throw a wrinkle in. It's important that you really understand that netting process. Step 3 in the netting process asks you to look at something called a look-back provision. Basically speaking, this applies to 1231 gains. Okay, 1231 gains only. And remember, I said before, 1231 gains produce capital gain treatment. Where you get the beneficial tax rate if you're a person, or ability to offset capital losses if you're a corporation. So capital gain treatment is great. And 1231 sales that produce a gain are treated as capital gains, except in a couple of situations. One of those situations is where this look-back provision applies. Long story short, if a company has 1231 losses, aka ordinary losses they had in the previous 5 years, then the government's not going to let you get capital gain treatment on 1231 gains that arise this year. They're going to want you to treat gains this year as ordinary gains, ordinary income, just like you got ordinary deductions in the previous 5 years. So you have to look back at those previous 5 years to determine whether you had any losses in those years, and then if you have to recharacterize some or all of your 1231 gains as ordinary. So that's one of the ways that 1231 gains can be treated as ordinary income, as opposed to the general rule of capital gain treatment. And here's an example of that. I'll get into Learning Objective 7, which is also important, in the next video.